So what we see on the screen is my Cairo model that presented itself during the 10 o'clock hour for the silver bullet. Super, super clean, relative equal highs, and everyone from my server wanted to have a review of that, a breakdown, how we can expect these things to occur, why they occur, what to look for, daily profile, weekly profile, and how to trade consolidations on the high time frame. So all of that is kind of what I want to go over here. When we're looking at a new day, we always have to start back to the daily chart because we have a new daily candlestick. That's giving us something to work off of. The algorithmic price delivery continuum tells us that we have to make allowance every 4 hours, every day, every hour, every 15 minutes, and so on and so forth, the times and the importance of each new candlestick. Friday comes up, sweeps the high into the inversion fair value gap here. We're looking to see if price wants to close above and then run to that high, back to all-time highs, or if this is going to act as SMT and move back lower into that monthly fair value gap. For me, I can make a case for either side. So I'm perfectly content with saying until I have a very clear drawn liquidity, I have to be playing intraday liquidity. So in order to do that, our top-down analysis remains the same. Here's the buy side, daily inversion fair value gap, shaded in blue. And off open, we have the opening range gap. What I liked about all of these super smooth lows throughout here is how they're just leaving that liquidity with that aligning of the 50%, the consequential encroachment of the opening range gap. So for me, I was looking for a potential short entry going into today, just playing that intraday liquidity. However, at open, we see price not show us any reason to want to move lower to that opening range gap, consequential encroachment. Price rallies up higher, and what's important to note from today is the discorrelation between assets. As ES is dropping, NQ is running higher. Everything else, relative equal highs. You have another SMT occurring inside of there. And then ES goes for its sell side while NQ drops. When we see the discorrelation like that, indices should be moving together. They should be moving in sync. When that's not occurring, you do not have high probability price action. So as price is leaving these relative equal highs, I'm moving to say maybe I was wrong about price not wanting that high. So what am I going to look for? What do I do with that information? Well, every 15 minutes, a new candlestick opens on the 15 minute, which we have this 15-minute fair value gap high, the buy side imbalance, sell side inefficiency. This low here is telling me that that is likely for price to draw into there. Takes out the low, turtle soup, aligns with first presented fair value gap. Now everything's becoming kind of clear. You have the relative equal highs. Intraday liquidity aligns with that high of the daily BISI, the inversion fair value gap. Price trades up higher, closes above the 1018 SIBI, works it, and then starts moving higher. What we see inside of that is the Cairo model, my Cairo model, which I have a YouTube video about. How I use ICT concepts and developed my own trading model around it. When this low overlaps with that first presented fair value gap, that is going to be rocket fuel for price, especially when the relative equal highs are such a clear draw. What's price telling you right here at 1023? It's not telling you that it's respecting this SIBI. It's showing you that it's closing over. You have consequential encroachment of the wick here. If price was really bearish, this would have either been left as a breakaway gap or a short dig as an institutional order flow entry drill. Entry for Cairo comes from the close above, stop loss goes below that inversion for value gap, and then it moves off to the races. And that is this entry here. These are pyramided entries on the 15-second chart, because if you looked at my Twitter, you could see here, here, and then off here. I meant to take it, in all honesty, on my PA account, but it ended up I accidentally chose the wrong account, and it was on an eval. So that's why I pyramided, even though it was in deeper premium, so the account would be passed and goes right to that high. So we have two clear low here and low here. Not quite super clean relative equal lows, but still that low resistant liquidity that people like to call it. As price is dropping through here, we see a lot of back and forth price action. But what type of price action is this? It's dropping slowly. Look at how the candlesticks are. 5 points, 3 1/4, 1 3/4. Versus as price is rallying up higher, how large were those candlesticks? That, in the context of the dealing range, to me, is creating a high resistant run. It's not dropping super fast. That tells me that the other side of the curve is going to want to. So this buy side curve, we're expecting it to be a low resistant run. We're not expecting to see deep retracements, which is why that 15-second chart allows us to get high probability entries with very little drawdown. Order block, here, institutional order flow entry drill. Price moves higher, inversion, comes back down, touches it, then takes the buy side out. Price seeks the discount array, first presented fair value gap, closes above, Cairo, there. Everything else after that is now low probability. Right? It's just a slow, painful grind and a consolidation into the close. When I'm trading, I want to really specify that I'm only going to be taking a high probability, one shot, one kill type trade. And this is what you want to specialize in. Everything inside of that price leg is what you want to be trading. All of this is super easy. The hard part is being content and missing all of this here. Being content not chasing that. Being content with, even if you miss this very small microscopic move that has really no relevance in the context of price action, because you're not missing anything from taking a trade from here to here. Look at the price action. You haven't missed anything. All of this is nothing. Yes, trades present themselves in there, but for me, they're not part of my high probability model. And that's why I'm not going to take anything after. When people say, what now? What next? That's the clearest sign that someone doesn't know what they're doing. Once your trade is done, you walk away and you're done. You come back after close to analyze price and see what it did and how you can improve off of that. You're not sitting there forcing yourself to trade this. Now, if you struggle with patience, what you need to do is sit through stuff like this, because it's going to show you that it's okay. It's okay to not trade this because it's not doing anything. Patience is something that has to be molded. We're never going to be born with patience. It goes against the human nature. When we're forcing ourselves to sit in front and journal the price action and tape read the price action, everything else that happens is okay. We get our piece of the move and we get to watch price unemotionally attached. So, going into tomorrow, this buy-side imbalance, sell-side inefficiency from August 10th is what my eye is watching. I want to see how we close, and the economic calendar for the rest of the week is really going to be what my focus is on.